I just got a text from someone, which I feel compelled to share this story because there's a lot of headline news out there that makes me want to vomit. I mean, it is so unbelievably sensational that Diana Olick is out there on CNBC talking about mortgage rates plummeting. Plummet is the word they use. Mortgage rates plummet. It might be the biggest over-exaggeration and the wrong use of word that I've ever seen, period. And that came out, I believe it was last night. If it wasn't last night, it was the night before. But that's the headline. Mortgage rates have plummeted. Okay. Sure they have. Now, what I will say is, if mortgage rates do plummet and they go down to something, for every point that mortgage interest rates drop, it unlocks 5 million new buyers. Period. That's what the number is. So the mortgage interest rates have not dropped anything close to a full percentage point, but there was a moment prior to the Fed coming out with a statement that there was a moment where the Treasury yields had dipped and mortgage rates came down fractionally, not plummeted, not a half point, fractionally. And that is what mortgages do. Mortgage rates, the mortgage market trades. It is volatile. If you've been watching for a while, you've heard me talk about volatility season. And we are entering into volatility season. But these headlines are getting people's attention. And I just got a text from somebody saying, "Good morning. I see that mortgage rates went down. Will this be a trend going forward?" And so thank you to whoever sent out that message. I do appreciate it. And unfortunately, is this place open or not? That's the question. Are businesses open anymore? Are they open or closed? Are they shutting down or not? Well, we're about to find out because I think this new Dunkin is open.
Here on 8240, right here, we have the best Dunkin Donuts in the nation. Shift leader Tyler, crew member Christopher. You know, we'll help you out every day.
Oh, here we go.
Runs on
Dunkin. Keep me going. Yeah, that's right. And by the way, you got a great name. My name is Chris too.
Thank you very much. Oh, awesome.
All right. Well, so they're open for business. We're open for business. Let's keep on rocking and rolling. You too. All right. So I came back. I wanted to talk to my main man. What's your name again?
MJ.
MJ.
Mm-hmm. MJ like Michael Jordan.
Oh,
Michael Jackson,
Michael Jordan. Let's go with Michael Jordan.
Absolutely,
Otherwise, you're not getting any babysitting job anytime soon. All right. So I came back in specifically. How old are you?
23.
23.
Yeah.
All right. And you right now, do you own a home? Do you
Currently renting.
You're renting?
Yeah.
Okay. A lot of folks right now found that renting is more affordable than buying a home.
Absolutely.
But I'm curious. So you're 23.
Mm-hmm.
What are your thoughts about the housing market or buying real estate?
Yeah.
Where are you at?
I think the real estate is a great investment for long-term portfolio to have in your asset class, but also, renting a home right now is affordable for like the younger generation because over, long-term, as you save up, you can purchase a house and pretty much be in the real estate game a lot stronger.
Yeah.
But I'm all for it. Buying a house now is the best investment you can make, because the housing market is always booming.
That's right.
Absolutely.
So, hey, listen, I would tell you, keep up the grind. Your personal, your service here has been exceptional, extremely friendly. If you're in Boynton Beach, you must check out this Dunkin Donuts. It just opened 2 days ago, and I appreciate you talking to me about the housing market. If there's ever anything I can do to help, give me a shout. I'm always here for you.
Thank you very much, my man.
All right.
You're the best in the game.
All right. Thank you.
Absolutely.
Have a good day, man.
Thank you.
Woo! I am feeling much better now that I got some caffeine, and it is 86 degrees out, so some cold coffee is always the right choice. But getting back on topic, getting back into it, Diana Olick, CNBC, boom, I'll pop this in. The headline here is mortgage rates plunge and demand finally inches back. Plunge and inches. Interesting choice of words. The key points here are, frankly, a nothing burger, but I want to share them because I'm getting people who reach out with questions about this downtick in mortgage interest rates. And let's keep in mind, these fractional changes are certainly helpful if you need a mortgage. However, it's not a big deal. I mean, we're talking about the average contract interest rate for a 30-year fixed mortgage with conforming loan balances decreased last week to 7.61 from 7.86. Not that big of a move, but more affordable relative to what it was. Certainly nothing close to what it was when it was 4, 5, or 6%, but definitely not as bad as 9, 10, 11%. But anybody who tells you that they know where mortgage interest rates are going to trade, or they know what the treasury yields are going to be, is completely full of crap. Nobody knows. And what we don't know yet, but I suspect is likely to happen, is what will the monetary policy be? What will the Treasury do? What will Big Papa Powell and crew do to manipulate the system in order to have something to point to get re-elected? What are they going to do? What rabbit are they going to pull out of their hat, or should I say ass, in order to make the consumer, the U.S. consumer, happy? What are they going to do to get the people who vote happy? What can they point to which looks like a healthy economic condition which will get them reelected? Well, if they can bring down mortgage interest rates and create a major bubble on top of the already major bubble of inflation that we've already experienced, if they can create fake value by creating a reverse housing market crash, well then, on paper, things look good. But in reality, it's a disaster because the rich will get richer and the poor will be left behind. And middle class does not exist anymore. But I suspect many mortgage brokers are having a bit of a sigh of relief, despite the fact that mortgage and refinances have fallen off a cliff completely. But applications to refinance a home loan increased 2% for the week and were 7% lower than the same week last year. Well, none of that is a surprise to me. As mortgage interest rates go down, applications go up. But it's nothing like what it used to be like, and I hope it doesn't go back there anytime soon. And I just did a video this week talking about the cities that are being targeted for attack by terrorist organizations, and I didn't have to wait long to experience one. Breaking news, China's ICBC, the world's biggest bank, was hit by a cyber attack that reportedly disrupted the treasury markets. Interesting how treasuries and mortgage rates are interconnected and how they trade. But they're under attack right now. And I talked about it earlier this week. The U.S. Financial Services Division of Chinese bank ICBC was hit by a cyber attack that reportedly affected the trade of U.S. treasuries. ICBC, the world's largest lender by assets, said Thursday its financial services arm experienced a ransomware attack that resulted in a disruption to certain systems. And while the Chinese bank said they're working with law enforcement, the truth is this type of attack has seen an explosion in popularity amongst bad actors in recent years. And this is just proof positive as to how vulnerable we are to a cyber attack disruption of systems, because almost every system that we rely on here in the United States is technology based. It is prime target to be disrupted by bad actors. And so we must remain vigilant, we must remain prepared, and we must not bury our heads in the sand as to what the risks are. Which brings me back to mortgage interest rates, because Diana Olick and CNBC talked about how the rates have plunged. And maybe that downtick was simply due to the cyber attack. Perhaps that's true, but what does Big Papa Powell have to say? Well, he remains consistent. And what he said is he's not confident that the Fed has done enough to bring inflation down. And he remains steadfast in getting policy in line with their 2% inflation goal. And he is not confident that we're there yet, which to me is the leading indicator that Fed funds rates will remain higher longer. Which also tells me that mortgage interest rates are not plunging, they're trading, and I suspect the long-term trend is significantly higher. Which does not mean that the housing market is about to crash, but it also doesn't mean that it won't. And with the threats to the United States upticking every single day, I remain committed to sharing the truth so that you can make the best decisions for yourself, for your family, and for your financial bottom line. Stay vigilant, stay prepared, and God bless America.